Um, yeah, and then we will begin now. And what I want to do is I just want to take maybe about 30 minutes and talk about some things that I think are just crucial. See, this is going to be uh, challenging because we have a kind of a, as we move forward, we'll have a more wide range of people, some that are starting out and some that are more advanced. And so we'll have a kind of a mix, but that's fine, you know. We will figure out how to do this. Maybe we can do this once a month and we can figure out how to do this. Okay, so Ajish, good to see you. And Vivek, yes. Okay, so let's do this. Okay, I can't record and minimize at the same time. Let's do it a different way. All right. Yes, okay. So one of the things that I want to begin with is about stock selection. Okay, if any of you want to take notes either on your computer or something, you're free to do that. You know, stock selection is often, by the way, for those who are very new, you know, how to purchase, how to buy. What I will do is I'll do a video on that, and without taking time here for this, I'll do a video on that just as I did a video on the moving averages. So that will make it easy because it's a simple process how to buy and sell. But okay, the stock selection often is a big question for a lot of people, and what to do. So here are a few things that I want to suggest, and then I will go through several steps, several other things that will help you with this process. And then maybe about 7:30 or 7:35, we can, you know, we can just begin to take some questions and take some time for that. Okay, how to select your stock list or your watch list. Um, See, a watch list is simply a list of stocks that you're watching. And which ones do you select for that? Well, I like to select from several different categories. Like, for example, maybe I might select two or three from pharmaceuticals, pharma, maybe from automotive, maybe from industrials, you know, like metals, construction, banking. FMCG is another one. So each of these, you can select two or three from each one, and you may end up with maybe 10, 15, or 20 in your selection. Okay, so why do I do that? Well, the reason I take different sectors is because on some days, certain sectors are bullish and they're moving up. And at the same time, other sectors may be going down. And so what will happen is you'll be able to get into some stocks that, you know, you'll have a variety, maybe in different types, and you'll have at least one or two that are probably on the bullish side. Okay, so that's the setting up the watch list. Okay, next step that I like to do is to narrow down my watch list. So I may have 15 or 20 on my watch list, and that's too many. So what I do is I use the moving average crossover. Okay, and I think all of you may have watched that video. I use the moving average crossover, and whenever the 20 EMA, 20 exponential moving average, okay, is above the 60 EMA, that is a good time to buy. Now, I like to try to get in as the 20 EMA is just crossing the 60. Okay, that's the time that I like to get in. Why? Because of several reasons. One, I'm getting into the trade at the beginning of a trend. Remember, when the 20 EMA is crossing or is above the 60 EMA, that is a sign of a bullish trend or an uptrend. Okay, so that in itself is a good time to buy. But when it is just crossing over is a good time to buy because of one reason is because I'm getting in at the beginning of the trend. And the other reason is this: all over the world or all over India, there are many traders that feel the same way, that use the 20 and 60 or 20 and 50 like that. They use a combination. There are many. So what happens is when that is happening, there is a good possibility that many more traders are getting into the trade at that point. Now, do I know that for sure? Is that something that is 100%? No, it is not. But when there are certain indicators that thousands of people are following, what happens is that many more will be doing that. And when more purchasing happens, literally the market tends to move a little bit. Okay. But some of you have asked me the question before, what really moves the price, right? What is it that really moves the stock prices? Actually, it's not people like you and me, okay, that we may purchase a few shares, 5, 10, 100, 200 shares, but that's not really what moves the market. What moves the market is the institutions, okay? The institutional buyers that buy maybe a few lakhs of shares or more. They're the ones that really move the market. Okay, so stock selection. So we first make the watch list. Second, we narrow down the watch list using moving average and the moving average crossover. Okay, another thing you want to do is look for support and resistance. By the way, I had mentioned in the group that please write down any questions that you have. And as I'm sharing this, if you have questions, please do write that down as well. Okay, so support and resistance. So I should share my screen with you so that I can show you what I'm looking at. Yes. Okay, so when we're talking about support and resistance, all right, here I have, the primary stocks that I have on my watch list. And then I have another one, which I suggested to many of you. These are the ones that are below 200. Okay, Indian Oil Corporation, ONGC, Coal India, these are all below 200. These are good for people who are just starting out and they may have a smaller capital. Okay, maybe I can just work with this. All right, so what do? What I do here is I open up the charts, and of course I try to open up the full chart. All right, I open up the full chart, and hopefully my internet is fast enough and I'm sitting upstairs. All right, I open up the full chart, and here is Indian Oil Corporation, IOC. Okay, so one thing I'm looking for is I hope you can see the red and the blue. So the red for me is the 60-day exponential moving average, and the blue is the 20-day moving average. See, it's crossing over. It has already crossed over probably around May, the 12th of May. Okay, it has already crossed over, and you can see what is happening there. Okay, so when it's crossed over like this, there are several things that I look for. One, I look for how much of a distance there is between these two. See, it started off a small distance, but then see the distance is greater between the 60 and the 20. The distance is getting greater and greater. So that is another sign that the trend is more stronger. It is already bullish, but it is all even more stronger. See, and also the distance between the 20 moving average, 20-day moving average, and the actual price of today. That also is another indicator that shows that it's really pushing ahead further than the historical prices. Okay, these are, by the way, these are called lagging indicators. That means these are indicators that lags behind the actual price. Okay, we don't know exactly what's going to happen, but we know history. Lagging indicator means it's just history. So that's the moving averages. Second thing I'm looking for is for the price action. And the term I used was support and resistance, all right? That's something else I'm looking for. But right here, see, this is not a problem because it's already moving up. But support and resistance, I didn't get to take some cherry-picked. Yeah, I didn't get to pick out some cherry-picked items, but here are some examples of support and resistance. All right, let me just put the indicator. All right, here we go. All right, look what's happening here. This is something that's a good example. See, the trend is up. Okay, the 20-day moving average is above the 60-day moving average. But you see what is happening? These are all one-day candles. Look what's happening. For about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 2 weeks. Okay, the market has been sideways. All right, almost 2 weeks, the market has been sideways. And now this is a new charting software I'm using. So let me see. Trend line. Let me see if I could find the right pattern to draw. If I don't, nope, that is not the right one. Sorry about that. Let me try this one. That also won't work. Nope.
You must try with the second option.
The second option, I was actually looking for another one. The second option is only 2 lines.
No, you just double press it. You will get a plenty of option in that.
Okay, let me see if I'm looking for the creating, no problem. I'll just do it like this. Okay, fine. I was using a different charting software and I switched to this. Okay, now what I want you to see now all right, just change the thickness. All right, here we go. Okay, I hope you can see what's happening here. So for the last several days, what's been happening is the price is going up and down between a particular range. Okay, so you have this particular range. Actually, I can draw it even closer than that. Okay, now the range is not a particular price point. Okay, keep that in mind. So it will be somewhere in this particular area. And see, it's just basically bouncing up and down in that particular area. So this is called this is called support and resistance. What that means is the area on the bottom is called the support, and this area on the top is called the resistance. So that means when the price comes down to this bottom area, the price gets support and it keeps it from going further down and it gets pushed up. Okay, and then here you get resistance and it keeps it from going up higher. Okay, so this is something, when you look at this, you may say, well, this is a good time to get into a trade, but because it's already the 20-day moving average is above the 60-day. It is bullish. You can get into a trade, but you'll have to wait longer because of this support and resistance movement going up and down. So you'll have to wait longer. Or what you can do is don't enter here. Okay, you wait and don't enter here at all because of what is happening. You wait until there is a breakout. Now, one of the things you can notice here is, see this support here, it's been tested 3 times already. Look at this. Once it came here and it went back up. 2 times it came here and went back up. Now here, it's trying the 3rd time. Usually 2 times is sufficient for there to be a breakout. Often the 3rd time, many people suggest 3rd time, you can be sure either there's a breakout or there'll be a strong move up. So there's 2 ways you could do this. You could buy once it comes here at support, you can buy it at support, and then you put your target at about this price here, 116.94, or around that age, around that area, you put the target to sell. So basically, you'll be buying around 110, and you'll be selling about 116. So you're looking about 6 rupees profit or 6 to 7 rupees profit per share. Okay, so this would be called a swing trade because you have a swing up. Okay, here it is, swing up, swing down, swing up, swing down. So you can get in on a swing trade here after you get one more day. You can watch tomorrow, ONGC, and see if this comes down here tomorrow. If it does, you wait one more day for another candle and see if it's a green candle moving up. If it is, the day after tomorrow, maybe Monday, okay, Monday, if it's a green candle moving up, that's the time to get in, okay, and then you can expect to go up to about 116. Now, is that a prophecy? Not at all, okay? That is a probability. You're looking at a probability that is higher. So you have the 20-day moving average over the 60-day moving average. That gives you a good probability. Maybe it's like a 50% probability that the price is going to keep going up higher. But you come here and you look at the price action, you look at support and resistance, and you take an opportunity like this, you see like this support being tested once, twice, and thrice, 3 times, then you can look for another move up. Okay, now you can sell at 116, or what you can do is move your stop loss further up. Now, if you're buying here at 110, where should your stop loss be? You bring it down maybe 2 or 3%, okay? And then put your stop loss there, because you can expect it to go down a little bit, but still go up, okay? And then, so you have an opportunity to sell at 116, 117, or instead of selling, you can just move your stop loss higher, like about 2% below that price, okay? And then just hold on and see if it continues to move forward. All right, so that's another one. Let's look at Coal India. These are all red, by the way. Let me just take it here. It might be, that way I'm not opening up too many windows, but it may all be the same. Let's see. Okay, like I said, I'm trying a different charting software, and I'm trying to decide if I still like this or not. Okay, here's another one that is a trending. Okay, see the 20-day EMA is above the 60 EMA, so that's good. You can enter. You're looking at a 50% possibility, but look what's happening here. See, you had 2 strong green candles, very powerful move. By the way, remember, these are one-day candles, and the move was very strong up there. And then you got this candle here. Let's take a look at that candle. Let me show you what that candle is, and maybe someday we could do an entire class on just candlestick patterns. Look at this. This candle, what's happening is this. See, the red candle means that at the beginning of the day, okay, the price was at the top of the candle, 155. At the end of the day, it ended here at 153. It ended lower than the opening price. Okay, the closing price was lower than the opening price, but it also tried to go up to 159, and it also made an attempt at 151. See, so there was a rejection of a higher price, and it tried to go lower a little bit, but not much. But the higher price, it rejected it much more stronger. And next day, look what happens. You get a really strong rejection of price, and it goes down. Again, it goes down, okay? And it tried to go a little further, but it didn't, because you have the small wick there on the bottom. And then look what happens on the next day. See, it tried to go down a little further, but it got pushed up. But then ultimately, the trend is still going down. So what does this mean? Do we have a support and resistance, kind of a bounce between the two? You don't know yet. We have to wait and see. It's possible that it could go up back to here and then go back down again, maybe 2 or 3 or 4 times. That is a good possibility. Okay. All right. Now here's one more that I wanted to show you, JSW Energy. This one, I really had a good time with this, but I didn't do a good job. From my purchase price, it had gone up to 25%. but I did not handle my stop loss properly. So I lost the trade. I sold it at much lower profit than I could have gained. I should have used that 2% trailing stop loss. Instead, I didn't do that. But look what is happening here. Look, 1, 2, 3, 4, 5. See all these, almost 2 weeks. See, almost 2 weeks, the market has been at a range. See this area? Just bouncing up and down here. So what does that do? Let me take the other chart. Okay. Yeah, I think I'll go back to the other chart patterns. Okay, here we go. You see what's happening here? Yeah. And this is not what I like, but I'll use it anyway for now. Otherwise, changing everything will be too much in the midst of this class. Yeah. So you can see this happening here. Let me see if I can move this out of the way. Yeah, I can. Yeah, here we go. Okay. So you can see the move up and down here. Maybe I've made it too big. Maybe closer to here. All right. So the price rejection we had once, and then we're going at it a second time. Okay, and then we'll see what happens. You'd have to wait. Like today, it tried to go up. See, the price tried to go up, and so this is a very strong rejection candle. The price is being rejected and going down. Okay, and this is something that is not a positive move at all. So it may come down back down to the support, and then you can look for it to go back up again. So this may be another swing opportunity when it goes down tomorrow. Watch what it does and see if it goes further down Friday. Okay, and if it goes further down Friday, then look for what happens on Monday and see if there is a bullish green candle. Okay, if that happens, or if you get a bullish green candle tomorrow, that might be a time to enter. And then what you would do is you enter at around 113 or 114, and you can look to sell at around 120 or somewhere around that range and put the stop loss, and then either sell there or continue to let it go up. All right. All right. So these are a few things that I wanted to point out to you. Let me stop the screen share. And yes, good. Okay, I've given a few candlestick patterns as well. All right, let's just take a moment for some questions, even about what we shared here, and we can move on from there. And then what I will do is one more thing. What I will do is I will I'll do a thing on how I evaluate each of the stocks on the list one by one. I'll go through them one by one and what kind of evaluation I do. We will do that as well. Any questions? Let's take a moment for questions. You can either ask it by unmuting yourself or put it on the in the chat box. Okay, we have one question from Ajish. How to use the 15-minute chart versus the one-day chart? Good question. Someone had asked that question earlier in the group, and we talked about that. So the 4-hour and the one-day chart is the best for swing trading and short-term trading. Okay, what is swing trading? As I said, the prices will bounce. Price bounces between the support and resistance, and you're just trying to get that one swing. Okay, just getting that one swing, and that's swing trading. Now that also is pretty good, but short-term trading is just riding the trend longer than that to maybe a few weeks to a few months. That would be more short-term trading. Now, how to use a 15-minute chart? Okay, let me let me take that screen share one more time. And all right. Okay, so 15-minute chart or the 5-minute chart. Okay, look at this. See, look what happened today. all right, you have this small candle, but then a large wick. That means the price opened here and closed right close to that amount, but it tried to go all the way up to 118, but it got rejected. So it's a very strong price rejection. What actually happened there intraday? Okay, we can look at that 15-minute chart and look what happened here. Okay, so the 15-minute chart today is the 27th. So it started here. So today started with a really nice gap up. Look at that. Okay, yesterday's closing was here and it gapped up all the way here. All right, all the way to the top. And that was a nice move up in the first 15 minutes, a move up. And then look what happened. All right, the whole, that full hour, it's been at that range. It didn't really move. The second hour, it got rejected and went back down again. All right, and this is probably about the third or fourth hour. It started moving up again. Okay, and then it got, toward the end of the day, it got very strong rejection of price. Why does that happen? Okay, often, let's see what time that is. Let's look at the time. 13:30, so 1:30, 2 o'clock, right? 1:30, 2 o'clock, 3 o'clock. See, often what happens is at the beginning of the day, the price was here. Yesterday, it ended up at 115, right? So the price gapped up very strong. And then there will be a whole bunch of people that would say, look, they probably bought at 115 or lower. And all of a sudden, their price is at 117. Okay, you might say, wait a minute, that's only 3 or 4 rupees. It's not much. No. You might be looking at people that have 500 to 1,000 shares or more. So for them, that 3 rupees or 5 rupees is really good. They would sell and get out. Okay, that is what would cause these red candles, and particularly this one. A lot more people in that 15-minute time. A lot more people sold. Okay, this is really heavy selling pressure that causes the red candles and causes the price to go down. Okay, so remember, supply and demand. Okay, when there's a lot of sellers, the price goes down because the supply is more and the price goes down. Okay, it's just basic economics. All right, then look what happened. I'm going to show you this. This is a crazy one right here in between. I don't know if you can even see it. See, there's a little thing here. This is often called a doji. All of these candle patterns have names, by the way. I'm trying to avoid these names in these early times to confuse people, to avoid confusing people. So this is often called a doji, which means it's an indecision candle. Difficult for the buyers and sellers to decide where they want to go. Okay, and then look what happened here. Okay, people decided to buy again because the price is going down. They bought again, and then look where it ended up, 118. Okay, so there were still people that either entered here or were there the previous day and purchased at this low price, and when they see the 118, they're happy and they begin to sell. Often in the afternoon, you will see selling pressure and the prices going down. So a lot of people wait for the noon time or just in the afternoon to sell and take some profits, okay? Because they know that toward the end of the day, the prices are going to go down. So another question is the end of the day a good time to buy? Well, if all of the other factors are looking good, maybe it is, okay? So the difference between the 15-minute, the 5-minute, and the 1 hour and 1 day chart is this. It's like walking through your place by foot. Okay, as you're walking through by foot, you see all the details that are there. But if you're on a helicopter, you'll see all the tops of the trees and you don't know what the roads are. You don't know what's going on down here. All you see is the top of the trees. But if you're on an aircraft, maybe 25 to 30, 35,000 feet up there, you might see something further down or you might not even see it, or you might just see clouds. In the same way, you get more detail with the 15-minute chart. So when we look at this 1 hour We go back to that. Yeah. So when we look at this and we say, okay, do I want to buy here or not? Because look, we had 1, 2, and maybe a third price rejection here. Do I want to buy here? Sometimes that buying decision can be made sharper by looking at a 15 or 10-minute chart because everything else looks positive. Why did it go down? Maybe it is just because of the selling pressure for that day. Look at this. Look how alluring this is. See, people might have bought this at 115 something, and then they come to this next day and they see it at 118. Okay, 3 rupees. All right, that's probably about what? About 2.5 to 3% profit. So people that have larger amounts, they will jump on it and they'll begin to sell. Okay, so that's one way to evaluate the different time frames. So the shorter time frame will give you more of the detail down on the ground of what is really happening. The bigger time frame, like the 1-day chart, 1-day candlesticks, it helps to avoid all the details, and you're looking at several days to a few weeks of holding on here. Okay, Ajish, is that helpful, or should I? Do you need more detail? Is that good? Okay, thank you, Ajish. Binny asked, why is there a pattern for the support resistance swing? How do we expect it to behave so? All right. Why is there a pattern? Actually, what happens, Vinny, is this. We're looking at history. We're looking at what happened in the background, okay? So by looking at the background, you're simply recognizing what was happening. And this is called, as you look at charts, and this is often called back testing, okay? As you look at the charts, you begin to notice certain patterns. And you say, that seems like a pattern where the price is just moving up and down between a range. And then you can look back in historically, and you'll see many more such patterns. Let's go back to that JSW Steel, and let's look at more. Look at this. See, here is more support and resistance, kind of a range market. And then there's an uptrend, but then there's a range market. It's almost like the market wants to take a rest. Okay, it's tired after moving forward like this. Here is another, maybe a few weeks of just being in range, up and down. So why does it do that? It's because these price movements are all exchange between sellers and buyers. Always remember, whenever one share is sold, there's a buyer. Okay, so it's a move between the sellers and buyers. And how much are they willing to buy for? How much would they want to sell for? And so it's a move between that. What makes these big bullish, big moves of candles? What makes that happen? Quite often, these moves come because of these large institutional buyers. That's often what happens, okay? Because, well, let me give you an example of that. Like, for example, let's say that I'm going there and I'm buying 10 shares of something, okay? But I say, no, I don't want to pay 117. I'll pay 117. I'll pay 116. So if I'm only buying 5 or 10 shares, they don't want to discuss that with me, okay? But and you can put an order like that. You can put a limit order where you can specify the price that you want to buy at, okay? But when I put a limit order, or when we put limit orders, even if it's 100 shares, okay? Well, whenever the price comes there, that order will go through. Now, when an institutional buyer comes and they're buying like, 5 lakhs of that share, and they say, no, I can't buy that much. I want it 1 rupee lower. Okay, of course. All of a sudden, they begin to negotiate. Okay, they'll call them up. They'll say, hey, what's going on? What do you want? No, I can't. I want it 1 rupee less. They will say, look, that's just too much. And they will bargain back and forth. And that bargaining takes place and they settle on the price. Now, How does that happen? Well, that happens within seconds. But the big institutional buyers, they move the price, okay? We just follow the trend and go along with it, and we learn the patterns and we profit from that. Okay, good. So why is there a pattern for support and resistance swing, and how do we expect it to behave? So historically that happened, and we notice a pattern, and then for the future, we can expect that to happen. That will be a high probability. We don't prophesy the future. We don't know 100%, but when these indicators line up, there is often anywhere from 50 to 80% possibility that it will work. Okay. And of course, another 20, 30% possibility that it won't work, and it may not go up, and it may just continue in that range. Okay. Next one. If it doesn't follow, okay. That was a joke. Somebody put a joke there. All right. Okay. Jimmy, is the word consolidation used in that context? Yes, it is. This range movement, there are different, as the price moves between support and resistance, there are several different terminologies people use. Some people use the term consolidation. They'll say the market is consolidating. That's another term they use. And yes, it is the same word is used. Okay, another one. I guess the exchange brings the price down sometimes by certain percentage once the stock reach a certain level. Okay, I don't know that. Okay, I don't know if the stock exchange is just the middleman. I don't know if they actually can do the price movements and the fixing, because the price is set between the buyer and the seller. Okay, and since we're not big buyers, we don't have much muscle power. Okay, and but the bigger buyers, they have muscle power and they have bargaining capabilities. I don't know about the exchange actually doing that. I highly doubt it. Okay. Binny, how often should we watch the 20 to 60 EMA pattern? In other words, can I just buy, set stop loss, and forget about it for days and weeks? Well, when it's the 20 above the 60, you know that the trend is up. Okay, and you can just buy it and simply just set your stop loss and a target and just leave it and wait for the target to hit. You can do that. And one of the ways that I have given that as a practical example is this. If I'm at the bus depot, if I'm at the bus stand here, and I go there and none of the buses has any labels, or none of it has the signboards, okay, which bus do I get on? I don't know. I have no idea. But if I want to go south toward Trivandrum, what I can do is I can go to the road, and just any bus that is headed south, I can show my hand and get on it. Okay. Now they may only go certain distance, but I can get off and go. But at least I know it's going in that direction. The same way, when the 20-day moving average is above the 60-day moving average, it shows me that the trend is up and the trend is moving in the way that I want to go. I can get on it, and then, like you said, I can set the stop loss and the target and just forget about it for days or weeks. Yes, I can do that. And then wait for it to hit that. Okay, any of you that have asked questions, if there's more discussion needed on that, please do ask. Another one, how do you pick stocks to invest in? Okay, all right, good. I had shared that in the beginning, so let me just explain that one more time very briefly. See, one of the primary ways is to look for stocks that are moving where the 20-day moving average has moved above the 60-day moving average. Okay, so that shows that the trend is up. You can get in as the 20-day is moving above. That may be a good time to get in. Okay, so that is one simple way you can pick the stocks. So take your stock, take your watch list, and tonight you can do that. Every single one of those, if you have 20 or 10 or 20, open every single one and make a list of every stock that is trending up. Okay, and then you can see which ones have a better possibility, which ones are. The climb is steeper. Make sure that you're not getting in on one where it is in range, or where it is consolidating, or where it is just going up and down between the support and resistance. Okay, avoid that, and then go with the ones that are moving up. Now, after it moves up, it will still do this after a while. Okay, after a few price points, it will still do this. Okay, then you can decide, do I want to just wait for a few days or weeks, or do I want to sell and get out? That's up to you. Okay, all right. And someone else, I have a question regarding the trailing stop loss. Good, good, good. Great question. Okay,
So
so
my question,
go ahead, Kunal.
see, there is. I just wanted to clarify this. You mentioned 2%. Sometimes in intraday, it goes down 2% and comes up, like if the stock is bullish. So, like, what do you have to say about that? Could we put it a bit more? Like,
Yes,
let's say I buy something at 10 rupees and I've got it at 15.
good.
I'm happy to come for it to come a bit lower, like, because like what goes up comes down, well, thing.
And what
So
comes
what?
down will go up.
Yeah.
Yes. Okay, let's look at this. Okay, so there are two ways you can do this. One, you could set a wider stop loss. Like, for example, you buy and then you set a stop loss for maybe 5%. Okay, and then wait for that to go up. You could do that, and you can avoid getting stopped out too quickly. Another way you can do it is, you see the support and resistance line. This is too light. The line is not dark enough. Let me make it a bit darker. All right. Okay. So see, as you observe this, this is the support level. So if you're going to buy here, where should you place your stop loss? Well, even if you buy right there, I would put my stop loss maybe below this support line, maybe 2% below the support stop line. Okay, or even further, because I know that it's in range. And look at this. Look how far this went down. So it went down even further. So you could do 2 or 3% and you can still be safe. The other thing, when you were sharing the trailing stop loss, another thing you can do is take that 5%, okay? And the chances of it going down to that 5% low is even less. So take a 5%, and then after it goes up, okay, after it goes up above your purchase price, okay, then look for a trailing stop loss. Okay, so what I do is, after it goes above my purchase price, I see where it is and I try to put a 2% stop loss. Now I check, when I set the 2% stop loss, I check that price, make sure that I am above my purchase price. Okay, and then as the price gets higher, I move my stop loss higher and bring it closer. As the price gets higher, I move my stop loss higher again and again. So I'll stick with the 2% after it goes beyond my purchase price. Does that help, Kunal? Yeah, so you can use a wider stop loss at the beginning and then wait for it to go up and then tighten up the stop loss. So for example, that time when I had JSW Steel and it went up 18, 20, and one time up to 25%, what I should have done is I should have put a 2% stop loss. And when it hit 25% and it had gone down, I didn't even see it. I'm working all day. I don't have time to look at this all day long. And when it went down, okay, it went down too far. But if I had put a 2% stop loss when the price went up to about 25% above my purchase price, and I put a 2% stop loss, and without me even knowing, it went down and it hit the stop loss, it would have sold at 23%. So instead of getting 25%, I would have made 23%. Still, it's a great bargain. It's a great, profit. But instead, since I didn't do that, it went way down and I didn't even know it because I was very busy for a couple of days. And next thing I know, it had gone down too far below. Yeah, good. There's a correction on the question about picking the stocks. Okay, the question was from Nifty, how do you pick it out? All right. Well, actually, what you do is I pick out from different sectors like banking or technology stocks, automotive, like that. I pick out several sectors and I pick 2 or 3 from each of those sectors. Okay. Now, does it have to be the Nifty 50? It doesn't really have to be. Why not? Because we're only staying in the trade for a few days. So it's not really a problem. We're not staying there for a long term. And often it may be good not to study too much about these companies. Okay, it is better not to study too much about these companies, because if you do, it will impact your thinking. And you will end up with a bias toward the company. And next thing you know, you'll say, oh, it's a really good company. It's going to come up again. And then the price drops and then you're waiting for it to come up. And well, of course, what goes down will come up, but your capital will get stuck there for maybe a month or 2. That can happen. I did something really dumb like that with which was that? I forget the name of the stock, but I've had it for like 2 or 3 months, and I got rid of it just 2 days ago at a loss of about 800 rupees. And I had put in 5,000, and I lost about 800 rupees. I just got out of it. I said, you know what? This is ridiculous. I'm holding on for 2 months. I could have made more than that 800 within this 2 months with that capital instead of it getting stuck there. Okay, so yeah, that's another one. So I'm not too worried about Nifty. You can buy just about any of these stocks, except the stocks that have very little movement. Okay, the number of shares being sold. Okay, if the volume is too low, don't get into it. Okay, some of those stocks, when you're trying to sell it, you may not have buyers. Okay, so you don't want to get into those. And watch out for penny stocks, stocks that are like below 10 rupees, 5 rupee stocks, 2 rupee stocks, and all of that. Watch out for that because of several reasons. One, the volatility is much more because those stocks can be manipulated more. Okay. The other reason is sometimes you may not have a buyer when you're ready to sell, and you'll be stuck with that. And then you may be, holding on to that for a long time. Okay. So these are some different factors you want to watch out for. All right. Another question. How often do you check Zarota daily? Okay. Good question. All right. For my own personal trading, I only need to check once a day. Now, I go back because I'm helping actually, the people in this group. It's a little bit above 40 people right now, I think. So I'm helping different people, answering questions and things like that. Because of that, I may look at Zarota more. But for my own trading, I only need to check once a day. Okay, and what do I check? Let me show you. Let me tell you what I check. I check the stocks that I own. I check several things. One, I want to know if it's still trending. That's one thing. The other thing is this: the ones that are in profit, I want to watch out to adjust my stop loss, my trailing stop loss. When the price is going higher, I want to follow it with a trailing stop loss. When it goes higher than that, I move it up. When it goes higher, I move it up. Okay, that's what I do. But remember, when you put a trailing stop loss, make sure that the stop loss is set above your purchase price. Okay, don't put it below that, because if it gets stopped out, you are losing. So those are the things that I check for. One, I check to see if it is trending, and then two, I check to make sure that I am following the trend. All right, good. Okay, other questions, doubts you may have, you can all ask it audibly, or you can just ask in the chat box. Okay. All right. Good. I hope that this has been helpful for you. If you have other questions, make sure you ask your questions in the group as much as possible. I'm willing to answer questions on a personal basis too. You can write to me directly and that's fine, or call me. I'm open to that. But I think if you're asking in the group, then the question you have, many others may have. Some people, not just one, many have asked me, I don't want to ask any dumb questions in the group. Remember, the only dumb question is a question that never gets asked. Okay, so that's not a problem at all. Asking questions is not a problem. All right. Anything else?
I had a question, sir. Like, when you set the GTT, I don't know whether you introduced that today, but then you set a stop loss. And is it possible that the market falls in such a way that it goes past your it goes past your stop loss where you have placed it and
sold at a lower price?
Maybe it doesn't get sold at all, but the price has gone down. Can it happen like that?
Oh, of course. But that's why you want to look at the chart all the time and see what is actually happening. Is it between the support and resistance or not? You want to see that. And so then you know where to place the stop loss. Okay. And you can even put a wider stop loss in the beginning, and then after moving up, bring it closer, bring it closer.
Now, I think his question is, let's say I put a stop loss at 100 rupees and the stock price comes to 100 rupees. Is it possible that despite me having a stop loss at 100 rupees, that my stock doesn't get sold?
Yeah. It went below 100, but my trigger was there. I don't know, it got triggered, but nothing happened. It didn't get sold. And I have to set the stop loss all over again. Yeah. I think I had an experience like that.
Really? Okay. That is very rare. Sometimes it does happen, but it's very, very rare. But of course, after you set your, you do your authorization in the morning, it should happen. Sometimes if the authorization is not done fully or something like that, there might be a glitch, or there might be like, something with your range or problem like that, or something on their side, but it's very rare actually. Yeah. Okay. Yes. And by the way, my power of attorney has not gone through yet. I'm still waiting and for that to happen, but that's not a problem. Okay, any other questions? Some of you haven't spoken or responded. Jacob is silent there. Robin, yes. Anybody else? Vivek? Some of you have just started trading, so that's fine. No problem. Okay, anybody have any thoughts, any ideas, any suggestions about these meetings? Please let me know. Send me a message, and I'd love to hear about that. And that would be good. And if you know people who are interested in trading, or that could use an extra income, definitely give them that file about the trading, and that learning to trade. That file will be useful for them. Okay, and I think that's about it. Thank you. Have a good day then.
Thank you so much.
I will take this video and I'll put it up for you.
Thank you, sir. Thank you so much.
Thank you.
Thank you.
Take care. Have a good evening. Bye now.
Thank you. Thank you very much.
Thank you, sir.
You're welcome.